Welcome back. With the S&P and the NASDAQ at record highs, is there anything cheap left out there, especially in the mega cap world? Well, according to Evercore, there is. The firm ran a screener, but they expanded it to the Russell 1000 stocks with a $10+ billion market cap, positive year-to-date earnings revisions, and at least 7 top and bottom line beats in the past 8 quarters. And so we bring you 3 buys and a bail from that list. Gina Sanchez is here to do the honors. She's Lido Advisors chief market strategist and a CNBC contributor. Gina, welcome to you. And we'll start with Merck as we stick in kind of our healthcare bent this hour. The shares are up 15% for the first half to make it one of the best performers in the healthcare space. You say this one's a buy.
Yeah, so Merck is one of these companies. It is fair value if you look at their long-term median forward PEs, but they have incredible opportunities for growth going forward. They have quietly doubled their sales expectations over the last 12 months, and that's pretty significant. There was a lot of concern over Keytruda and whether or not they could get over that sort of patient cliff, but you see a number of other relationships that are coming to the fore, including in-licensing from their new lung cancer drug, a Moderna lung cancer vaccine for melanoma, a lot of really great, interesting things, and also a new dual agonist that is in the GLP-1 category that combats fatty liver disease. So these are all great revenue sources for Merck in the long run.
All right, and your next 2 picks are also kind of in the healthcare space. The first one is Abbott Labs. That was our third mystery chart. It's actually down 8% this year. It reports next week. Why would you pick it up here?
So Abbott Labs is interesting. They just got the confirmation from the FDA to start distributing their glucose monitors without a prescription. And I think right now, given the wave of interest around health and improving health, obesity efforts, diabetes care, there's a really big market and a lot of interest for getting their hands on these glucose monitors. So I think that's a big leader for them. But they also have a huge brand portfolio that they are also benefiting from, and they've been growing their dividend. And yes, the market's up today, but I think there's probably going to be some volatility going into the election. So I'd say a stable dividend grower is probably not a bad addition to the portfolio.
And Cigna is your final pick here. Why do you like Cigna, whose shares are down more than 9% over the past 3 months?
Yeah, Cigna has definitely been unloved. If you look, they have 2 kind of components of their business. Evernorth, which is their specialty pharmacy, that has actually done incredibly well. And the expectations for growth going forward in the sort of long term are, somewhere between 5 and 8% growth over the long term for revenue. That's pretty solid. And then if you look at their core business, their expectations there are even higher, and they're continuing to expand their relationships and contracts with health systems, et cetera. So the outlook here is great. And healthcare on the whole, I mean, the big theme here is healthcare, is one of those really steady Eddie defensive stocks that you want to have to sort of help provide some stability in volatility.
All right, that brings us, drum roll please, those are your buys of this whole stock screen list. We asked you, what would be one name that you'd bail on? And this one, I remember from the past, you're not a fan. It's Zoom Video, and it's down 20% year to date. But they did revise full year earnings and revenue guidance higher last quarter. So it's still a sell for you?
So yes, it is. The challenge with Zoom is that they are going to have to block and tackle for every new sell that they make, because they have a freemium model, and they're competing against Microsoft Teams that's bundled into every Office 365 subscription that they have. So Microsoft owns the client from the very beginning, whereas Zoom has to fight for budget. And that's the challenge. And yes, they are improving their product. I think they've done a lot with their product. I do like their product, but it is a challenge when you're having to convert freemium to paid customers.
Sticking with Teams. Gina, thank you so much. Hopefully joining us on Zoom today. No, Gina Sanchez.